Hi everyone, welcome back to my channel. Today I'm very excited to discuss a tool that has replaced Spot Gamma and Bookmap for me called Rocket Scooter. They use market maker activity, particularly around gamma exposure and hedging mechanics, to build liquidity maps that predict how the whole day will go. I've been using it for a very limited period of time, 1 week to be exact, and am blown away by its accuracy. So far it has a 100% accuracy rate, which I actually thought was something I would never say about any tool. The concepts they use is called positional risk analysis. So before we get started, if you'd like to try Rocket Scooter, I'll leave a coupon code in the description. You'll also find referral links for TradingView and Topstep funded trader programs that will give us both discounts. Lastly, if you enjoyed this content, don't forget to like and subscribe to help me grow this channel. So with that being said, what you're looking at in front of you is Rocket Scooter. So I'll get more into this, but I just wanted to show what a liquidity map looks like, and we'll discuss some of the key concepts and how this can be used. So you'll notice here that this is it's integrated with TradingView by default, and it even has default indicators that you can pop in there. And right now I just have the Rocket Scooter custom indicators that are released for all users. And essentially what this does is it builds this map at the beginning of the day. So the day's been completed, and unfortunately this is still very new tool, so I can't really show historical days without using screenshots, which I'll make sure I track closely as we move forward. But it told me as soon as the day opened at 9:30 that this was going to be what they call a bear long up day. And essentially what that means is that we're in the bear zone. So if I scroll over here, you can see this whole zone is the bear zone. And where price was going to bounce to and respond at, which levels it would break, where we would likely stop, and then start coming back down. And all this is mapped out on this screen right in front of you, which is incredible. It's just super predictive. And so, as mentioned, it allows for predictive trading. Now, their claim to fame, and it has been proven to me, is that you don't need to use technical trading, volume price analysis, or any of that. You can actually just trade purely off the liquidity map by building a trading plan. However, I still prefer to use volume price analysis at this time, and it's helped me have an incredible win rate this week. I actually posted it on Twitter, and I'll talk about that some more. But it essentially using gamma exposure, Vanna, things like that, which I've discussed in previous videos, and I do plan to go deeper into those topics soon. It's just very complex, and I need to make sure that I cross my T's and dot my I's, get everything right. But they essentially know how these market maker algorithms are going to work from 9:30 to 2 p.m. And so therefore you can predict exactly how price will move, with the caveat being that it can't be during like a major macroeconomic news day, such as like FOMC minutes, CPI data releases, Fed meetings, things like that can indeed throw it off, because big changes can happen in the market that the market makers didn't expect. But up until that point, everything is driven by algos. All the big money use algos. They don't have traders sitting there dropping millions of dollars manually to move price. And so they actually have reverse engineered how these algos will work and where they'll respond, which is incredible. And so I mentioned this already, but it's an early release, and you know, the interface is somewhat buggy. They do have the classic app. I've been using the newer app, but they are improving it every single week by week, and keep adding new features as well. So the features I want to talk about are what have made me a ton of money this week. And I'm going to talk about hedge pressure and monthly hedge pressure, which essentially are zones where we can expect market makers, smart money, to inject a bunch of volume and push price in a certain direction. Hedge pressure is based off weekly expirations. Monthly hedge pressure is monthly expirations. They also have a half gap concept, which essentially takes the middle point between the closing price of the day prior and then the opening price, and fills out a line where the half gap is. And using the resilience indicators, you can tell if that half gap is going to break, meaning when price approaches it, it will price likely move through it, or if it will hold. And then you can also use resilience to determine if monthly hedge pressure will hold as well. And then they have some upcoming concepts that I'm not going to talk about because I honestly haven't used them yet and can't talk about them intelligently. So I'll leave that out for now. I'm sure I'll revisit it, but it's called Doomsday, and then they have some indicators to tell you how irrational the markets are. So one thing I want to mention is that I'm very excited about this tool. So I'm going to be starting a new Topstep combine. Now, if you're not familiar, you can trade futures through Topstep, And what this lets you do, and as you can see, it's a brand new account, so I'll be starting with their lower end one because I want this to be accessible to people. I want this to show that any trader can come in, use this tool, be extremely successful, and open up a small Topstep account for a very low price. So they start at $165 a month. Right now they're doing a discount where you can get it for $99 a month. And essentially what it is, you go through a two-step combine. So you essentially churn, your total max loss is $2,000, and they start you with what they call a $50,000 account. The reality is that you can only lose $2,000, so it's more like a $2,000 account, and you have to churn that $50,000 into $53,000 twice while following specific risk-reward rules, which are actually very fair. They're the most fair I've ever seen for any funded trader program, and they're actually rules that we should be using anyway for an account this size. And essentially, once you do that twice, then they fund you fully, and at that point, you don't pay this $165 anymore. You just pay your data fees. You keep 90% of the profits that you make, and they keep 10% because they're risking their money for you to trade with. And so it makes it trading incredibly accessible to anyone that doesn't have a lot of money to trade with. And you essentially trade on futures now. Using the smaller account options, you should stick to micro futures. Bigger accounts, you can stick to regular E-mini futures. So I'm going to be using micro futures, and I'm going to be sticking to initially anywhere from 3 to 5, most likely at first 3 positions. And I'll be using these liquidity maps that I just showed to trade these futures and essentially churn past my combine, past both steps, and then trade it to make profit. And hopefully people can learn to do the same thing and use a funded account to increase their income significantly. So that's like I said, I'm doing this because I'm really excited about the tool. And this particular account, I do have a separate funded account I've been using for a while now. And this account's going to be purely dedicated to Rocket Scooter, where I'll be taking all my Rocket Scooter trades on using their tools only, and along with volume price analysis, which I've done a whole series on if you're not familiar with. So moving on, these liquidity maps aren't made to be used alone. So they actually have a playbook. And this is one thing I love about this tool, is that when you see the days, it's right here's a screenshot. It's a bull long up day, which essentially means that when we're going to come down and hit this hedge pressure, we're going to bounce and move higher, and that we should continue moving higher throughout the day. And there's other things on this that I'll get into, but you can see on this chart that's essentially what happened. So we came down and touched this blue line, which is the hedge pressure line that we talked about, and we moved higher, at which point you can trail your stops. And these gray boxes are call walls and put walls, so you can essentially trail your stops as we break each wall. And then when we come down through it, you get stopped out and you take your profits, and then you look to re-enter. You can see we didn't come quite down to the liquidity map. We did get close, but it was a nice candle on higher volume showing us that we could re-enter. And then you can do exactly that, and then essentially repeat that process. And you can see we had 3 solid entry points here on this particular bull long day that we could have just rode this thing up and essentially caught every single noteworthy move on the day. And there's other concepts I'll get into, but the way we use this is this playbook. So you can see on that previous screenshot, this is a bull long up day based on the liquidity map, which you can see right here. And these playbooks tell you how to play each day. So this past Thursday, which was August 4th, 2022, was a mean reversion day, which essentially means we will bounce between call walls and put walls and just keep reverting back and forth. They called that at the start of the day at 9:31. It was a complete mean reversion day. And just to prove that to you, it's incredible. If we look at the day prior, so right when the market opened, they said this day right here was going to be a mean reversion day, and we were going to be bouncing between the walls that they had defined. And you can see that's exactly what we did. We just bounced between the walls that they had defined. And to me, mean reversion days are the most difficult to trade. And so I want to make this new series I'm going to be doing very beginner friendly. So mean reversion days are just days we don't trade, that we just sit out and we go on with our lives and do something else, or trade a different ticker, which is exactly what happened that day. AMD was very viable. So instead of focusing on SPY or micro ES, just trade a different ticker that is not in a mean reversion day. So then you have bull long updates, which are phenomenal. The playbook shows you how to take those. You can take longs off of monthly hedge pressure, or take longs off of hedge pressure, or just take longs if we're well above those and just start running. Bull long days mean essentially bull long down means that we will come down at first to touch that hedge pressure and then proceed to move up. And it really depends on where we open in relation to hedge pressure and monthly hedge pressure that defines these. And these playbooks map that out for us. So it makes it very easy, again, so you can take emotion out of it and literally plan your entire trading day ahead, and which is just astonishing to me on how predictive it is. And they've been, as I mentioned, so far since I've been using them, they've been 100% accurate. I'm not going to sit here and say that it will be that way every single time, but even if it's 90% accurate, we have something really special. And so bear short days, I haven't experienced yet, but you can see it's just the opposite of bull long days. And then this was a bear long up day today, which essentially means we were in the bear zone, which we probably weren't going to break out of. We had a big fall on some macroeconomic news, but yet we still come down to hedge pressure, and then we ran higher. And then once we got to the top of that bear zone, which I'll talk about, we dropped. And then we came back to hedge pressure, and big money stepped in and moved us higher again. And this playbook, if you just follow this, you would have had a minimum of 2 phenomenal entries capturing so many points on micro ES or SPY. But you know, more sophisticated traders can short at the top of that bear zone, and I'll talk about some of that shortly. But basically, you pair this playbook with the liquidity map, and it tells you exactly how to play it, and it actually works. And so I took a quick screenshot of what that mean reversion long up day looked like. You can see the start of the day said we're going to have a mean reversion day, which means we were going to bounce between these walls. And so we did come below the walls at some point, but then we came right back up through them and bounced off them again. So this was the top call wall, this was the bottom put wall, and we essentially just chopped around. And yes, you can play this if you're a more advanced trader. I don't recommend it though, unless you have experience with this or you have a good plan going in. You are great at reading candlesticks and volume. Otherwise, it's best just to stay away. So I want to talk about today's liquidity map, and I outlined some key points that I'll get into. I outlined the hedge pressure area, the half gap area, how we knew we would clear that, the top of the bear zone, which is an area we could have shorted at, and I'll compare this to the chart, how we came back down to hedge pressure, ran all the way back up through the half gap again, which was predicted ahead of time based on these resilience indicators. And then basically right around 2 p.m., the data they're using to build these liquidity maps is still viable. It can still be used, but it's not as guaranteed to be accurate. I can't necessarily say guaranteed. I don't want to get anyone in trouble, but the accuracy goes down a bit. So usually you can just stop your trading day at 2 p.m. And if you follow the liquidity map in the playbook properly, you've already made your money. There's no reason to keep pushing the issue. So, and a significant amount of money. So let's talk about today. So today opened up and we could see it was a bear long update. So I immediately checked bear long update. So I checked the playbook, and essentially what that means is that we are opening in the bear zone. So this big gray box is the bear zone, and we are above the hedge pressure zone where we're opening, meaning that we're going to come down, likely touch that hedge pressure zone, which we can see indicated here on the playbook. So here's our open, going to come down to hedge pressure, touch that, and bounce up. So it says we're going to come down to this blue line, touch that, and bounce up. Now, when we get to this middle area, this is our half gap, and we have these resilience indicators down here. In particular, this gray line in this resilience indicator shows if it's above 0. This is measuring all of the underlying holdings of SPY and telling us if the likelihood that we're going to break that half gap area, the gray line. The orange line is actually used for monthly hedge pressure. So I don't want to talk about that here because monthly hedge pressure was all the way down here. But the gray line is used for the half gap. And so because this gray line was above this 0 line, even though we rejected off the half gap at first, we held this put wall, rejected off of again, didn't come down nearly as far, meaning that the sellers at that half gap are being exhausted. Then we eventually break through it. And again, that was all predicted because of this resilience indicator. Then of course it's a bear day, bear long up day. So we get to the top of this bear zone, and in between this up here is the bull zone. In between these two zones is essentially where liquidity is being easily matched by market makers, where They can easily find buyers and sellers for both sides of the options. However, the likelihood of us breaking out of this bear zone on a day like today is like a 4% chance. And even if we do break out of it, it actually happened earlier this week where we did break out of it and go to the bull zone. We came right back down. In this case, we just rejected off of it. And I knew we were going to reject off of it, and I'll talk about how I knew that. And then we essentially fell all the way back down through the half gap, back to the hedge pressure zone, the weekly hedge pressure zone. And once again, big money stepped in right at this hedge pressure level, pushed us higher. Resilience showed we'd break the half gap, which we did. Then we got stuck right around here, started chopping around a bit. This is where I took final profits for the day, and I was done because then 2 o'clock came around, and at this point I had just had significant winnings. I wasn't doing it on my new Topstep account yet. I go on vacation next week, and I'll try to do some mobile trading, but I'm not as effective on mobile trading. So I might have to wait another week before I can really start hitting that account nicely and showing all that off. But regardless, just talking about this day, so if we reference, now I'm using micro ES, but the price action is the same as SPY. So even though I'm looking at the SPY liquidity map, you can see here that and I'll just mark it. So right here, let me actually show my drawings here. So this purple line down here was the hedge pressure line. So right out of the gate, and let me drop to the 1 minute in hopes of better seeing this here, getting some more details on the price action. Right, so we open up at 9:30, we come up, we touch that hedge pressure zone, and then we run. Just as the liquidity map and playbook said we would, which has happened every day so far. Right around here was that half gap level. So let me just move this blue line down. These lines are actually my levels from 15-minute and 4-hour, which I might even be able to do away with. I still use a lot of my old ways of trading because, again, this is a new tool for me. I'm still learning it. I recommend you do the same if you plan to use this. Don't just drop everything you know. And honestly, stuff I know is still extremely valuable. Like this candle and this volume told me that this indeed was going to hold. And so when we came up to this half gap area right around here, we rejected it first. And then yet because of the resilience indicators, the gray line, the resilience indicator told us it would indeed break because it was above zero. We can see that as we tested it again, we came back down and we held this VWAP area, and then we went to push it again. We did reject it one more time, but we didn't come down nearly as far, and that's a clear-cut sign to me that the sellers in that area are losing strength, and then therefore it was just extra confirmation outside of rocket scooter data that the half gap would break. And sure enough, it did. We move higher, and then so right up here, right where we see these candles topping out, was the top of that bear zone. And so what's amazing about this is these candles, that's a clear topping pattern. So forget about rocket scooter for a second. This is a clear topping pattern that we would actually that we weren't going any higher. So not only did we have rocket scooter telling us that we would likely end here, the chart itself was telling us, and it's telling us from all these topside wicks and how the price action is losing steam. And I've done videos about price action momentum. Certainly check those out if you're not familiar. But this is a clear-cut sign that we're losing momentum here. We keep trying to push. We're making lower highs, and all of a sudden we start to fall. So this was the optimal time to take shorts. And at that point, we don't really have any hedge pressure interfering to push us higher until we come back down to that original level. So there was really no reason to get out if you're following the liquidity map. Now, according to the liquidity map, we should only be taking longs off of hedge pressure. I made the decision based off confidence in my own trading to take shorts and hold those shorts. And so as we came down, fell back through the half gap, we get right back to hedge pressure. And this is what really blew me away today. At 11:30, we come right back to that hedge pressure level, and we get a massive amount of volume, big green candle showing it hold. Right there, I just marketed longs, and based on liquidity map, I was paying attention at these walls, and essentially what I like to do is, so what I do is if I enter at hedge pressure, My stop is a little bit below it. And as we push up, I hang tight. And then once we finally get above it, so right around here, we're trying to push through it. And it's amazing to me because the volume profile also lines up with all this stuff. This was the value area low, and which ended up being a significant put wall. But so as we're trying to push above it, I'm just holding my position. I'm not moving my stop. I'm not being overly anxious to do anything. But once we break above it, we come down and retest, and we start to move higher. And I actually slid my stop up. And so, and I did actually take profits when we first touched it, not full profits. I took some of my position off here and then just held the rest of it. And then, so once we held this retest, I actually slid the rest of my position stop up. And actually, I didn't even slide it up to here. I slid it up to break even, let this play out. And then essentially, it wasn't until we got past the next wall, which was the half gap, that I slid my stop up to that previous put wall. So basically, and then also each time we get to a level or a wall, I do take some profits off, just take some profits off the table. So if I'm doing 5 micro positions, like the first level, I take 2 off, slide my stop to break even, then take another 1 off when we reach the next level, slide my stop to the previous level, so on and so forth. And we'll get into that in follow-up videos. But this predicted the entire move. And essentially, once we got up here and we broke this level and we came down, and my stop, I had slid my stops up at this point because we were getting later in the day, so I knew things would be less predictive, and I ended up getting out and then not taking any other trades. But I'm excited to do things in this account and show all of this, and I just wanted to give an introduction to what this predictive trading is and the tool I'm using for it, and just how powerful this can be once you understand what you're reading. And full disclosure, I'm still learning it myself. This is still new to me. I'm just very excited about it because I've never seen so much potential in any one tool. And so I wanted to share it, and I will continue to cover more of it. So hopefully you learned something here and you are as intrigued as I am. And of course, let me know if you have any questions, and I will certainly be cranking out more and more videos in the future. Thanks for watching.